Selling covered calls is a very powerful strategy. I talk about it all the time. However, the more expensive the stock, the more juicy the premium. So if you have a small portfolio of less than $5,000, maybe even less than $2,000, how do you sell covered calls on stocks that are $100, $200, even $300? Well, stick around because in this video, I'm going to show you how to do just that. Hey guys, Corey here. Welcome to the channel. If it's your first time stopping, and be sure to subscribe and tap the bell so you know when I post new epic content just like this. And of course, give me a thumbs up as I greatly appreciate it and it helps the channel grow. Before we jump into today's video, things haven't always been easy for me. If you're struggling in the market, I struggled at one point too, which is the whole reason why I started this YouTube channel. Years ago, I went through a divorce. I was pretty much bankrupt, trying to go through college, learn how to trade. And then years later, when I started making profits and having financial freedom, I told myself I was going to create a plan in order to help everyone like you succeed in the market. As I truly wanted to help others, it was a promise I made to myself that if I had financial freedom, that I would do just that. I would help others, which is why I launched this YouTube channel and the reason why I launched my Discord training course and one-on-one coaching. Now I have financial freedom. I can buy the cars that I want. I've been able to own very nice cars, trucks, buy a house for my kids, and to be able to live the life I've always wanted to live and just have financial freedom and to be able to provide that to my children and my family. If I want to buy a new car, I want to take my kids on vacation, I'm able to do these types of things due to my financial freedom. However, I told myself that when I achieved that, I would help others. So I've launched my full Discord training course, limited spots available. If you guys are having trouble in the market and you're looking for coaching and guidance and you just want to get out of the position you're in and understand trading even further, or maybe you're a complete beginner and don't even know where to begin, I am here for you. I would love to provide you guys with one-on-one coaching, full training, full Discord. You guys can join at any time. Investwithcorey.com right there on the screen or in the information box below. And if you guys are also interested, I launched my masterclass boot camp for July that completely filled up. So I had to launch another boot camp for August and it's over half full already. Only 3 spots remain for the masterclass boot camp. You guys can sign up at any time, like I said, on my website, investwithcorey.com right there on the screen or in the information box below. So let's dive right into the video at hand, guys, which is selling covered calls. You buy shares of a stock that you want, let's say $30 or $35, then you sell $40 covered calls. You cut the juicy premium. If the stock doesn't go beyond the strike price of that call, then you keep the premium and the shares and you repeat over and over again until the stock price goes above the strike price of your short call. This will get you assigned. You will sell your shares at the strike price of the call that you sold. However, how do you sell covered calls on stocks that are really expensive? For example, if you have a $1,000 portfolio, you actually can sell calls on Tesla, Meta, Netflix, Adobe, any of these expensive stocks. So if you have a few $1,000s in your portfolio and you're looking to grow it rapidly, I'm going to show you guys a strategy, a very powerful strategy that you can implement into your portfolio to start making very big return on large stocks and collecting that juicy premium while having a very small account, less than $5,000. So let's dive right in, guys. I just want to point out that I'm not a financial advisor. This is not financial advice. I'm just here to give you guys technicals, fundamentals, strategies, tips, and guidance on the market. However, it's ultimately up to you to decide which stocks you want to put your money into and what size of a position, whether it be options or shares or strategies you run on that stock, as it's ultimately your money. Let's take a look at Meta. With a $5,000 portfolio, it'd pretty much be impossible for you guys to sell covered calls because this costs $47,000 to $50,000, depending on where the stock price is, for 100 shares. So let's take a look at Meta and see exactly what's going on here. And it looks like a really good covered call to sell would be right around 515 or 510. So for this coming week, we're going to have a little bit of a run. I would wait for Monday to open up, let the stock price run a little bit, and then I would sell a 540, 535 or 540. Let me show you exactly how we'll do this because there's a little trick to doing it if you don't have a large enough portfolio, and I'm going to show you exactly what that is. So let's jump right in to Robinhood. So let's go over here to Meta. If you own the shares, it's pretty easy. You're just going to click on sell call, go out to this week, July 26th. If you're watching this in the future, it's the exact same strategy, just a different date. We're going to go ahead and select 515 or 520. If we're selling covered calls, we could get away with selling this, although it's not a lot of juicy premium because of the price right now hasn't moved. The stock price is $476. Realistically, this consolidation here, we got to go above that. So at least 510 would be really safe. However, 510 is only $150 juicy premium. It's not a lot on 47,000, but if you own the shares, you could get more aggressive because if you bought them at 480. Getting out at 505 would be totally fine. You'd make $2,500. So you could collect $200 juicy premium every week. However, when you own the shares, 15 delta is not even aggressive. Even 20 is not aggressive. If you own the shares, you can get away with selling 25 to 30 delta. 492 would even be okay. You'd collect $500 juicy premium. However, because this is a little bit of a different strategy, you really want to keep it between 10 to 15 delta to be ultra safe. 8 to 10 is even safer. So what we're going to do is we are going to pick a 15 delta. Let me show you why. 510 is about a 12 delta. This is fairly safe. We'll go to 512. This is 10. 515 is 9. This is a very safe delta. We're going to click on sell call, just like we normally would on a covered call. Then we're going to click on buy. We're going to go up 2 legs up to 520, $500 spread, and click buy. This is going to give us $30 juicy premium, and our max loss is $471. So we no longer need to have $47,000. We only need to have $500 to do this trade. Now, I recommend running $1,000 spread if you have a larger account, say $2,000, $3,000, $4,000 or $5,000 or more. Then I would go up and buy the 525. The reason for this is the larger the spread, the more the stock has to move to put you in a bad position. Let me show you exactly what I'm talking about. So if we go back to the 520, if Meta was to go to $518, you would lose $280. Now, if we go to the $1,000 spread, if Meta was to go to $518, you would only lose $250. So $250 versus $280. So just by doing $1,000 spread, if you follow your rules and you say, hey, if Meta goes above 518, I'm out, and you follow that rule, then you're going to lose less money on the $1,000 spread. With the $500 spread, your break even is $515.29. On the 1,000, it is $515.50. So the stock price has to move more for you to lose the same amount of money, which is why I highly recommend $1,000 spread. Plus you make $50 instead of $29. Now you might be thinking, well, that's not a very good return, putting up $950 to make $50. $1,000 collateral, and I have to put up $950 of it as the seller. Well, it's not a lot of money, because if you owned Meta shares, I would only be selling kind of in the delta range of 20 to 25, which would get me around $400 juicy premium. So sure, $400 is 8 times the amount of potential profit from this call credit spread. However, instead of having $47,000 in collateral, you only need $950. So it's significantly less collateral. Sure, it's an 1/8 of the profit, but it's like a 47th of the collateral. So realistically speaking, this is like 6 times higher profit potential. In fact, we could bust out the calculator. $47,000 divided by 950 is 49 times, okay? So it's 49 times less collateral, yet we're only collecting an 1/8 of the collateral. So you see the difference here. You divide 8 into 49. This strategy is 6 times more powerful because we're collecting 50 on every 950. If we were to divide 950 into $47,000, it's 49 times. If we times 49 by 50, it's $2,473 premium versus 400. Because you divide 2,400 by 400, it is 6.2 times the amount that you would get if you were owning the shares. So we could go even a little bit safer, run all the way up to 520 and then buy the 530. And that means Meta would have to jump all the way up here. Meta would have to jump $44 in 5 days, which is really unlikely at almost any point in time. And if we were to do, let's say, 20 of these contracts, this would be 19,000. Less than half of what you would need for Meta. Less than half. Yet, instead of making $400, we will make $700 or $800 because we could probably get 36 for this. So this would allow us to make double what you would make with 47 grand on half the money. So half the money, double the premium. This is what is so powerful about call credit spreads. Realistically though, on a small account, like maybe $5,000, you'd run 2 of these. You'd collect $72 on 2 grand. That is very good, because if you do this 4 times a month, that's pretty close to $300, $280 to $300, and the collateral is 2 grand. So you're collecting 10% per month, maybe even 15% per month. A very, very powerful strategy for you to implement into your portfolio. We're just collecting premium at this point in time, right? Oh, I'll take your premium. Here, give me your cash. Thank you very much. Oh yeah, Meta's going up. Meta's going up. Of course it is. I'll sell you a couple more of those if you want. You want 2 or 3 more of those? All right. And we'll just keep tacking them on here. Sure, we'll do 20 of those bad boys. Let's go. Collecting juicy premium. If you guys like this strategy that I'm showing you how to implement into your portfolio, and you guys are struggling in the market, maybe you're just looking to learn even more, grow your financial freedom and your financial wealth, or maybe you're a beginner beginner, I've launched my full training course, Discord, and one-on-one coaching, and I would love to help you achieve the financial freedom that you ultimately deserve. I also launched my masterclass bootcamp, which filled up in 3 days, so I had to launch another bootcamp for August. Only 3 spots available, so if you guys want to sign up for that, you can do so as well at investwithcorey.com, right there on the screen or in the information box below. I ultimately really want to help as many people as I possibly can, so I look forward to speaking with you and helping you out on your trading journey. So we can also run this strategy on a stock like Netflix. We can go over to Netflix. Let's take a look at the Netflix chart. And let's say we're looking at Netflix and we think that it'd be really good to sell a 660 or a 665 because we don't think Netflix is going to go above. And I think that's a really good spot to sell. 665 is a good strike. 670 is a little bit safer. Click on sell, click on call. This week we go up to 660 and the delta is 21, a little high. 665, 17, go a little higher. 670 is 13. That's where we want to be at. 670, click on that. Then we would buy 680. Look at this, $80 in 1 week on $1,000. This is almost 10% per week. 10%. The S&P 500 puts out 8 to 15% per year, 8 to 12% sometimes. This is 10%, 12% per month. This is a very powerful strategy. We just click on continue and we'll fill it. If you guys want to run a couple, let's say you want to run 4 of these and you have a $5,000 portfolio, you can make $320 a week. On a $5,000 portfolio, you can bring in about $300 a week, which is $1,200 a month. Again, between a 10 and 20% return per month. This specifically is a little bit higher. Very aggressive, even though it is kind of out of the money. It's at 13 delta, 15 delta, which is only about a 13 to 15% chance that the trade would go against you. So this is a very powerful strategy to run in your portfolio. So you can see how powerful running this strategy is in your portfolio. You can bring in $50 to $100 a week on $1,000. So if you have a $5,000 portfolio, you can run some on Meta, Netflix, Tesla, Nvidia, AMD, and you could ultimately generate roughly $250 to $350 a week on $5,000. That right there is $1,200 to $1,500 a month. This is a 20% return. This is a very big amount of profits. So on a $5,000 account, you can make about $1,000 to $1,500 a month. This is very big profits. When you think about it, this is about 20 to 22% per month, which is huge. So ultimately, running the call credit spread strategy is the best and safest way to get into big stocks on your account when you have a small portfolio. And you can use this to leverage on big stocks to collect juicy premium to grow your account even faster. Thanks so much, guys, for being here. Really appreciate it. Be sure to subscribe, tap that bell so you don't miss content just like this. And of course, give me a thumbs up as it greatly helps the channel grow. Also, like I said, guys, if you are having trouble in the market and you're looking to expand your knowledge, grow your portfolio, and just eventually have financial freedom, I would love to help you with my full training course, Discord access to trade alerts, as well as access to me 24/7, and as well as my one-on-one coaching. I would love to have you guys and help you achieve your financial goals and your financial freedom. I know this video is over, guys. Don't worry. I've picked out another video just for you, and you're going to love it. And that video is right here. All you gotta do is click that link and I'll see you over there. And remember, until the next video, let's grow our wealth together. Take care, guys. If you're still here, click the link. I'll see you guys over there. I'm in 2 places at once. Of course I am. Click that link.